As the U.S. and U.K. move away from importing Russian oil, China is looking to buy it at a discount. A couple of things to toss to you with, Eunice Yoon. Number one, yesterday I saw one of our State Department officials saying that China and President Xi is now aware of possible reputational damage from being so close to Russia. And then number two, but interesting piece in the op-ed pages today that China should learn about watching Russia, that it's not as easy to do what they're doing. You better be ready for some of this. If you're going to go after Taiwan, you better think long and hard about it, and maybe it makes it less likely. I don't know how you feel on either one of these things.
Well, I mean, there is a lot of speculation about China potentially changing its stance, but currently it looks as though they're still tap dancing around the whole issue, still not wanting to call the Russian attack an invasion, still very much wanting to at least appear neutral in terms of any types of efforts to mediate. But in terms of the relationship, the oil relationship between China and Russia, China imports 15% of its oil from Russia, and it could end up paying lower prices, or at least negotiate lower prices, if demand from the U.S. and U.K. dries up. The focus at a legislative session that's ongoing right now among policymakers is that energy security is key. And in fact, an official with the state planner today stressed that ensuring supplies and strengthening China's reserve really need to be the focus. Now, the state planner has reportedly been instructing state firms to hunt for more supplies in the global market, drive hard bargains with bestie Russia, and explore investments in Russian energy companies and assets. State refiner Sinopec didn't respond for comment, but one industry veteran told me that there are reasons to believe that exploratory discussions won't go very far. He said that Russian companies have a reputation here for being notoriously difficult to manage. Also that the sanctions are only starting to hit the Russian economy now, so a lot of those assets could be cheaper in a year. And then finally, he said that Chinese companies are hypersensitive right now about the EU and U.S. sanctions, and that those sanctions could eventually hit them. So the foreign ministry today actually specifically criticized the U.S. and U.K. oil ban. And then, Joe, you were mentioning President Xi. President Xi had a virtual summit with the leaders of Macron, with the leader of France, as well as Germany. And the focus there was his criticism of the sanctions, which he said could drag down the world economy.
Shepard Smith here. Thanks for watching CNBC on YouTube.